Alright. Guys, what are we doing? We're gonna go do the forest to tree approach. Man, it's a crucial part. I keep putting all the pieces together and I think this is the final one. We're gonna be maybe once a month. I'll be analyzing the industry, its sector it's in, the index that sector is in, and we'll know right away each month. Is my environment that I'm trading in, my stock, is it a stage 2, stage 4? We're going to avoid doing stage 4s in indexes that are in stage 2s, and indexes are in the stage 4s, and we're going to look for sectors in the industry that are stage 4, so we're able to choose them and short from there, guys. This will make the difference between 5 to 10% gainers to 80 to 90% gainers. All right. There's a NASDAQ. Monthly defined. Resistance. Right here. Ooh. And it's already broken out of. Reach its target. Oh. Zoom. And stage 2, guys, it resolved here. Sideways move, stage 2 continuation on the works. Very good for the NASDAQ. New York index, composite index, guys, definite stage 3. Tempting here a continuation breakout. Our SPX are going to be our baseline, guys. And even if it's closing out on the stage 2 breakout, it's still really underperforming the SPX. tsx, what do we have here, guys? A little choppy waters. Trying to tempt a stage 2 continuation breakout right here. Pulling back to a breakout line. So we'll have to see. Still underperforming the SPX, guys. So right now the only one that we have outperforming the SPX is the NASDAQ composite. That's going to be our stage 2 candidate index, where we're going to get our stocks from, and not the other indexes. Here's the monthly for the TSX. Could have a close above those levels here. Then we'd have that implied measure move. Add it to the breakout line. Cool. Right there. Check it out, guys. In progress. Is it better than the New York Stock Exchange on the monthly? Let's check it out. Not super, right? I think the TSX looks better on the monthly. Right now it's within its range. It's going to have to go test those upper levels before it goes out. The TSX is already at those upper levels and trying to break out, guys. What do we have here? This is the Venture, guys. TSX little brother. Oh, see? This potential stage 4 right there. So look how easy it is. Now we identified the forest. We know that the Venture, if this closes below this line, we have one more week, 737. That is nasty, guys. That is nasty. Wow. That's definite. Venture, stage 4. Look at that. Look how underperforming the SPX. It's been the stage 4 for right here, I think, guys. I'm not looking anymore for like twice volume on breakdowns. But what I'm looking for is crescendo. Stan says it was really negative on stage 4s. When you have crescendo volume picking up on those downwards candles like here. See how it's picking up? Three weeks in a row. This is this week. It's not even finished. Might finish up here. That means very, very, very bearish. Stage 4. Venture stage 4, New York Stock Exchange. I'd say stage 3, working its way here. TSX, possible. Stage 2 continuation. And the NASDAQ composite, guys, in an almost scary parabolic advance, guys. That is scary. Wow. If I compare to the move it had before here, that's a good angle, but this one, man, whoo, reminds me of that game on The Price is Right there, the little audio going up there, and whoo, fall off. So that's the order: short, venture, and buy Nasdaq Composite, TSX and New York Stock Exchange Composites. You could wait on the sidelines for that. Let's go do the sectors, guys. What do I have here? Okay, consumer discretionary. So that looks okay, guys. That looks like a little like the Nasdaq breaking out on its way to its target. Nice. Information technology, yeah, that's the one that resembles the most the Nasdaq reaching its target. So that's even better than consumer discretionaries. What about the energy sector? This is the one that's going to impact the TSX, I think, a lot, the most. So it's trying to break out. A lot of noise here, up and down. It seems it has closed above the breakout line, guys. So we'd have this measured move. Say the less greedy of the measured moves right here. Wow, didn't choose it. There you go. But just those wicks, man, I don't like that. Just gives noise. I like it when it's Marubozu candles, close on top. This one is like market indecision, even if the price is trading higher. What about health? Health. Oh, that's nice, guys. That looks a little bit like, I think, the Tehran, one of those sectors there. Which one? That looks like the TSX breaking out a little bit. Composite. Let's go back. Tempting a breakout. If it closes, guys, another breakout here. So that's another sector that I wouldn't mind going into. I'd rank that one below. Information, number 1. Consumer discretionary, number 2. Health, breaking out. Energy, breaking out, but a lot of noise. What about utilities? Ooh, not super duper duper. But you see, higher lows. So that I'm going to take as a good point. And it still has to go above this high. So there's a lot of morphing to do. Halfway territory. Leave that there for now. Higher lows. Barely. Oh, I don't want that. Getting better with the software, but still needs some more practice. The shortcuts. Lots of noise still working its way up. Real estate, guys. Not noise. So it's getting close to that breakout line there, but we have to keep an eye here about 206 levels. We'll rank it just where it is. Financials. Ooh, money. All right. Breaking out that bottom pattern. But here's the resistance, guys. Here's where we're looking at. So halfway, has some halfway to go up. Tails I'm going to bring down here. Halfway up, right there. Materials. Material, girl. All right. Here's the bottom. See, resembles like the other ones here, right? Like util. Working its way halfway. Gonna maybe go test that breakout level right here. So that's kind of neutral, guys. If we go on the weekly stand, you'll see that this is gonna look like a stage 3. Ooh, even stage 4, guys. Look at that. Not nice. Let me go check this one. All right, I already had a stage 4, stage 3 not going up, still underperforming the SPX. Always stage 4, catching up the SPX. So stage 3, sorry. but really borderline. If it goes through this Ichimoku cloud, watch out below. Real estate. Guys, man. And here, energy outperforming the SPX, but consolidating really close. So either that's continuation breakout we're going to have. Time will tell. Health, stage 3, saw that? Stage 3. And after that, trying to work its way out, starting to outperform the SPX. Oh, see? Discretionary, guys, has been outperforming for a while, guys. And look at that nice breakout, pull back, continuation breakout. And technology, that looks pretty much like the NASDAQ. Beautiful, higher highs, outperforming the SPX for a while. So any stock that's part of the NASDAQ, that's part of technology, that's part of maybe a sub, then we're going to look into industries within that sector. That's where we're on the bulk of our stage 2 breakout, guys. Let me just continue. And thus, and the other ones, well, they're so-so, right? So all we did, we did the trend line, same thing as materials. Looks pretty much the same. No man's land. Trying to find his identity. Telecommunications. Not like, oh, even breaking down, guys. Where's the last line of support here? Last line of support right here. Oh la la. Patterns within patterns. They don't always share formations. Man, this is awful. Telecommunications, that sector, if we had an index that had that sector within it, then that's be candidate to short. Eventually, very close to. Very, very close to. Not looking good. And consumer staples, guys, look low. I don't like that. That breaks the momentum of stage 2, right? So if you have stage 2 or upward 1, 2, and then you have that break here. Remember, I have a ton of examples when you see that. Doesn't mean it's going to crash, but you're just going to waste time. It's slowing down. We're going to go look on the weekly. So not good. Bounce off here, but still low on the lower end of. And is it worse than, is consumer staples worse than telecoms? No, but it's not good. Let's go look at the monthly. Okay, Stan. Consumer staples, Stanway. Click. All right. Ooh, it's been in stage 4, guys, for a while. Look at that. Underperforming the SPX, stage 4. Wow, that could have been a short candidate. Again, that sector has to be part of an index where it's not in a stage 2, guys, because the index could still pull those weaker sectors within it, suck them up. You really want to make sure the biggest tree is the index, then the sector, then the industry. But it's good now. Yeah, recapping it. We actually have a view. We actually did analysis. We gave information to our brain. It's not just am I in the good sector? Am I in good? I know pretty much my stock's in NASDAQ, but is it in the... Now we know. Now your brain has seen which industries, which index are the ones you want to play stage 2s. Composite, check. Stage 2 play. SPX, the venture, composite, stage 4. That's how you want to play it. TSX and the New York Stock Exchange. Borderline, you want to make this for confirmation to go up. But look, you're still underperforming the SPX, guys. So what's the use, right? TSX, same thing. Borderline, you have to keep an eye on it, see if it's going to catch up the SPX. And the venture is completely underperforming. So that's how I see it for the indexes and for the sectors. Information technology, number 1. Anything in there you want to buy. Consumer discretionary, same thing, looking good. Health, starting to break out, starting to overperform the SPX. So these are top three guys: health, consumer discretionaries, and information technologies. Energy, borderline, you see that? And that's probably going to help our TSX eventually if it could start outperforming the SPX or getting close to it, or else try to find some energy stocks that are in that sector that are in the NASDAQ, guys, to get pulled up by that index and not outperforming by a lot the SPX. So these are starting to be the borderline sectors. Real estate, underperforming, below declining 30-week average, don't want to be there. Seems like end of stage 2, guys. Remember that? Look at that trend line violation, below 30-week average, and you got that Ichimoku support right there, trying to help you out, but you're still underperforming the SPX. Utilities starting to angle upwards, but still underperforming the SPX. Don't want to be there. Materials, a lot of action below 30-week average. You're going through that Ichimoku support. 30-week average going down, guys. This is almost a stage 4 candidate. Very close. If we get a break below here, below this level, then this is a stage 4 candidate, guys, right here. As soon as you get out of the cloud. Ooh, so that's how you're going to bring that down here. Tills. Industrials. Oh, almost stage 4, guys. As soon as you get out. As soon as you get out of the cloud, guys, this is a short. Anything in that sector and in an index, hopefully in the venture, guys. Get an industrial stock in the venture. Oh, man, stage 4. Look at that, stage 4 already. And pull back. What is this? Consumer staples. Wow, it's just horrible. Telecommunications on and off in the stage 4 for a while. Very erratic. So there you go, guys. You have these industrials not looking good. Telecommunications. Materials. And consumer staples. These 4 stage 4s. So we find stocks in those sectors in the venture short. You find stocks in these 3 energy borderline, in these 3 top 4 in the NASDAQ. We buy. Pretty cool, right? I'm going to go more deep dive next time with maybe with the industries. I got all these industries lined up, but I might be attacking this when I'll be doing my chart sections, my chart analysis. I'll be going through highlighting the industry it's in, the sector it's in, and the index real fast, just to show that we have all our ducks in a row, guys. Control the trends, monthly, weekly. Make everything's in our favor. Stand triple confirmation. Ichimoku cloud. And now we got the forest to trees. Index, sector, industry. God, we're set, man. This is so cool. All right, guys. Thanks. See ya. Ciao.